Hello everyone, welcome to this session, Assessing Capital in Canada and Asia. It's my pleasure to bring you some opening remarks from Toronto. The Hong Kong Economic and Trade Office Toronto represents the Hong Kong SAR government in Canada, with a mandate to foster closer economic and trade ties between the two places. The panel for this session truly reflects our long-standing trade ties, particularly contributed by the unique business advantages offered by Hong Kong for Canadian companies operating in the city. These include Hong Kong's prime location in Asia, rule of law, free flow to information and capital, low and simple tax system, and strong government support, to name but a few. Hong Kong also offers a fertile startup environment that is supported by various public and private initiatives, helping entrepreneurs turn great ideas into reality. With its robust IP protection and full range of legal, financial, and professional services, Hong Kong is Asia's CBD, serving as an operational base for over 9,000 overseas and mainland companies, including 200 from Canada, many of you as Chen members. As a world-leading global banking and financial hub on the doorstep of the mainland of China, Hong Kong is the world's largest offshore renminbi business center. Initiatives include Shanghai Hong Kong Stock Connect, Shenzhen Hong Kong Stock Connect, and Bond Connect schemes, further promote capital market access and the internationalization of renminbi. It is exciting to note that the central government has agreed to expand the scope of Shanghai and Shenzhen Connect to include Hong Kong-listed, pre-profit biotech companies and mainland companies on the Science Tech Innovation Board. In the past decade, Hong Kong has been among the top 5 global IPO raising markets, ranking first for 7 out of the past 11 years in terms of IPO funds raised. Also, Hong Kong is the leading destination for China's FDI outflow. While the world is struggling with COVID and economic recovery, China is the first country to reopen and recover, with a positive GDP growth record for 2020. Trade between Canada and China recorded a roughly 10% increase last year. Hong Kong is set to play a pivotal role in China's game-changing economic development strategies, namely the Belt and Road Initiative and the Guangdong-Hong Kong-Macau Greater Bay Area development. Our work in 2021 will focus on creating business opportunities through smart integration with these strategies, which can offer new and exciting opportunities for companies in Canada. Beyond the mainland, ASEAN is Hong Kong's second biggest trading partner in goods and the 4th largest in services. Our free trade agreement and related investment agreement with ASEAN can boost business and investment opportunities throughout this huge and fast emerging trade bloc in Asia. On our horizon is the Regional Comprehensive Economic Partnership, which was signed last November. To take our regional economic integration to yet another level, we hope to join the partnership as soon as possible. Hong Kong, in short, offers abundant opportunities for your business regardless of where you are, be it in mainland China, Canada, and Asia. We welcome overseas companies, including Canada's, to make use of the Hong Kong platform to raise capital, expand, and maximize your return. Our seasoned panelists have excellent experiences and insightful advice on raising capital. Companies in Canada are always welcome to contact Christopher of our office or myself for any question on your investment into Hong Kong. I wish all of you a wonderful experience at the panel and this conference.
Okay, welcome to everybody to Chen Hong Kong and HKCBA's 7th annual Transpacific Entrepreneurial Virtual Conference. My name is Terence Chow, and I have the pleasure of hosting a session which is all about accessing capital in Canada and Asia. As our conversation progresses, and for those of you in the audience who would like to submit a question or comment, please feel free to do so through the chat box. We'll definitely do our best to answer all of your questions now or after the conference. Joining me today, a panel of experts that have spent considerable time in the capital raising space, and in no particular order. I'd like to first introduce Joseph Fung, Managing Partner at Saltagen Partners and Principal Director at Fairchild Capital Management. Also joining us is Raymond Wong, Head of Investment at Hong Kong Science and Technology Parks Corporation. And finally, certainly not least, Chen, Head of Investment Promotion Canada at Invest Hong Kong. So 2020 is now behind us, and it's been a busy year to say the least. But why don't each of you give a little bit of more background about what you do at your respective organizations and just how you got through 2020? Maybe Chris will start with you.
Well, 2020 was a lot of fun, I can tell you that. No, in all seriously, 2020 was an extremely challenging year. But first, let me introduce myself. My name is Chris Chen. I'm head of the Invest HK presence here for Canada. I'm representing the commercial interests of Hong Kong on behalf of the Hong Kong government for Canadian organizations, academia, businesses, and so forth. I'm sure most of you already know what Invest HK does, but for those who don't, we are a government bureau representing foreign direct investment and trade for Canadian companies and organizations looking to get into Asia via Hong Kong. In many ways, we are the representatives Hong Kong Incorporated for Canada. We do play equal roles, not just representing the Hong Kong economy, but also our sister agencies and bureaus such as Science Park, Cyberport, ASTRI, Hong Kong Productivity Council, the exchange, the stock exchange, and so forth. In terms of COVID-19, it was a very challenging year for not just for the Hong Kong economy, but also for Canada. There was a significant drop-off in terms of outbound investment from Canada in general. So it did have a notable effect on inbound activity into Hong Kong. However, having said that, Canada has its strengths in certain industries, and Hong Kong was a beneficiary, a recipient of those strengths, being biotech, the life sciences, fintech, and other subsectors of innovation and technology. That was met by obvious challenges such as the lack of business travel. It's hard to set up a business. It's hard to do foreign direct investment when you cannot get on a plane or have little willingness to do so. The ability to put people on the ground in Hong Kong certainly was a thorn in our side. However, there were ways that companies found workarounds for that challenge. And there were significant opportunities for Canadian companies in Hong Kong. The Greater Bay Area, the sheer market size, the market opportunity that exists in the Greater Bay Area and Hong Kong are becoming much more known within the Canadian business community. And we are getting significant requests to learn more about it, as well as requests to actually move into Hong Kong to tap into that. A little bit about myself. I lived in Hong Kong for 10 years, and I'm posted in Toronto right now. I also lived in Tokyo, Singapore, and Taiwan, so I have a fairly strong perspective of Hong Kong vis-a-vis the other Asian markets. I'm originally from Vancouver, and prior to Invest HK, I was a head of digital innovations and marketing for financial services companies in Canada and in Asia Pacific.
Busy life, to say the least.
Yeah.
Okay, Raymond, a bit about yourself and a bit about what you do as well at HKSTP.
Sure. Just a word on HSDP. This is a Hong Kong Science and Technology Park, also a statutory body. And we are a step away from the government so that we have more room to groom innovation and technology in Hong Kong. We have about 1,000 tech companies here, about half of which are incubators, 3 years or younger, and small, medium enterprises, and also research arms of international companies here, a good mix of them. We have basically connecting you, giving the technology companies here the infrastructure, the space, the equipment, link them on to the talents, as well as helping them to do employment. We have Asia's best incubator, award-winning incubator here that has groomed over 700 incubators, and 85 of which are still surviving. That's a very good record. And also we do market adoptions, linking to the business connections in Hong Kong as well as in GBA as well as Asia. And also last but not least is the capital connection. I'm the head of investments of Science Park. My major role here is to invest. We have a fund of about 80 million US dollars invest in partner companies here in Science Park, as well as connecting you to the investors. We have about 1,000 investors in our database. That's the gist of it. And for myself, I have actually spent 9 years in Canada. I studied in Canada in engineering, and then I worked at IBM Laboratory as a software engineer. And after that, I spent about 25 years in Asia doing sell-side investment banking. And lastly is the private equity fund, and which I spent about 16 years in HSDP private equity, investing in Pan Asia, over about $2 billion US.
Great, thank you, Raymond. Joseph, yourself.
Well, yeah, thank you. So it's a pleasure to be on this panel with everyone. I would say that I'm the most, out of everyone here, probably the smallest institution representation, because going from government to NGO to now private organization, that's where I am at now. And so a little bit of a background, managing partner of Saltagen Ventures. So we're a venture capital fund focusing on seed to Series A stage, deep tech startups. And we have a quite diverse portfolio, but we found that quite a large number of our startup companies actually come from Canada for various reasons. And I mean, I would say our investment mandate primarily focuses on not just deep tech, but enterprise, business to business plays in oligarchic environments and helping them scale up also in difficult to scale up environments. So we find ourselves oftentimes in medical technology and AI infrastructure. And I mean, it's been great working also with partners such as Raymond over in Science Park, and also various partners in Canada and Hong Kong as well. So we have quite a lot of experience in being on a high touch VC fund, working with startups coming out from Canada and scaling up over here in Hong Kong into various parts of Asia in that way. And so I would say a little bit about myself. My background is in finance, and came from the buy side in quantitative research. And I would say that it's been quite of an interesting journey. The last 20 years, a lot of areas in which people never really invested in has become kind of more and more mainstream. And the areas that I kind of focused on was really not the moneymakers at that time, was agricultural technology, frontier infrastructure building in areas in Western Asia and all that. But what was interesting is that there's a lot of asymmetric information, and a lot of information that you cannot really put and quantify in paper easily. But how do you actually put in that risk and to invest in that? And that actually comes along quite well with the skill set in understanding the risk that's involved in early stage technology, and in particular scaling up into different parts of here in Asia as well too. So I would say that kind of going back about COVID in 2020 was that I would say surprisingly, our fund has been doing quite well. I think it's basically kind of sticking to our guns, figuring out, where these startups really can scale and funding them. And I think there's been quite a lot of, milestones that we're still being able to hit, especially in the medtech space within our portfolio companies. So, I mean, I can go through that more in detail a little bit later in our panel. And I would say that, coming out of 2020, other than the work as a parent, I'm not sure I came out that unscathed. It's a little bit difficult, having all the kids at home in this little small apartment in Hong Kong. But I mean, everyone's experiencing that right now as well too. And so, and then I kind of have a different hat as well. So relevant board experience. I sit on the Creative Destruction Labs Global over in Canada as a board advisor. Kind of looking at opportunities to scale the institution, with other university and other regional institutions on a public-private side for incubation and I would say startups that can grow beyond the Canadian borders as well too. I sit on the Asia Pacific Foundation ABLAC Council in representing Hong Kong, kind of looking at trade implementation policies and advice to the federal government of Canada. And I also sit on the VersaTech board over in Hong Kong University on the board management side for investments as well too. So we kind of look at it, from different angles, but I see that again, actually what's going on right now, other than COVID, is also the impending escalation in trade war issues. And I think that's something that everyone's kind of in the investment side in Asia, in North America, has to be attuned to. So what does it mean, and where are the opportunities? So I'm kind of excited to address that with the panel here today.
See, this is precisely why I put up my hand to moderate as opposed to speak, because listening to all of your introductions and your deep experience, obviously both in this space, but then working on both sides of the Pacific or Atlantic, depending on how you're looking at it, obviously you will, all of you will have much more interesting intel to share versus me. And me getting to ask questions, I get to learn at the same time, which is fantastic. So a bit about myself. My name is Terence Chow. I'm the CEO of Asia for the wealth management business at the Royal Bank of Canada. I've been in Hong Kong now for a couple of years, so still a bit of a rookie. Got here 2 years ago, and it was primarily born and raised in Canada. Worked in New York for a little while. Grew up within the capital market space at RBC. And then about 5 years ago, I joined the wealth management business, primarily to lead the operations team in Canada, and then subsequently Canada and Asia. And then I moved to Asia and then took over the business for wealth management here in Asia. Very much a journey of growth for us as well. We did take some time to take a hard look at what exactly our value proposition is and why we should even be in Asia, quite frankly. What's our right to compete? And maybe that'll resonate with some of the Canadian companies and fellow colleagues out here in Hong Kong. But what's our right to compete? What's our edge? How are we going to go head to head against some of the other bigger firms, quite frankly, in this part of the world? And we quickly realized that, well, first of all, there's a massive Canadian contingency here in Asia, and particularly Hong Kong. I think the official number is somewhere around 300,000+, but I feel like it's more than that for sure. And increasingly more so, Canada is a destination of choice, and whether that's for education, for generation 2 or generation 3 of high net worth and ultra high net worth clients, whether it's divesting and allocating capital abroad and just getting better diversification, or whether that's just maybe even thinking about retirement and going to a comfortable place to live, notwithstanding cold winters in Toronto. But Canada is increasingly more preferred for many reasons. And then there's this sense of these global families that have different generations all over the place, all over the world. And you know what, that's our specialty. Like we're number one in Canada, increasingly more relevant and the top 5 wealth manager in the States. We've got a very meaningful business within the British Isles as well, and then Asia. So very much the Asian arm of a global business. And I think that's the exciting part, is how do we help families with these global connection points that we call Asia's global families, manage their wealth, plan for their wealth, more importantly, because it's all about the plan and then executing on the plan over the long term. So as for myself, recently married, 2.5 years ago, moved to Hong Kong right after the marriage, and it's been an adventure. We're loving every second of it, notwithstanding COVID. But even then, not many people know that Hong Kong is only 25% developed, right? What you see in the postcards and the skyline, that's just 25% of it. 75% of it is mountains and beaches and lush greenery and so much to explore, so much to see. And so we find ourselves doing much more of that, just really kind of soaking in the experience that is Hong Kong. And when I can hop back on a plane again, I can actually see the other half of my team, which is based out of Singapore. So I'm looking forward to that as well. Anyway, enough about me. Let's get into it. Capital raising in Asia. First of all, what is that? What kind of capital are we talking about? What kind of companies are actually asking for capital or needing capital? What are they trying to accomplish? Let's talk a little bit about the what. And maybe Chris, I can jump back to you again. Would love to get your perspective on some of the interactions that you've had and how you've been helping maybe different companies or different individuals.
Sure, no problem. I get the feeling that what I'm going to say will be mostly an overview, and I think that Raymond and Joseph could probably take what I say and probably flesh it out in the private equity and on the technology campus side. But as far as the government is concerned, if you think about what InvestHK does, we see ourselves, we position ourselves as the gateway to entering Asia Pacific, and our first line of support is generally, we help companies set in. But frankly speaking, there's a lot of organizations that do that, not just in Hong Kong, but all around the world. So our value-added services is actually helping companies thrive once they get here. I mean, to set up it somewhere, to establish a business is easy. To make it do well is something else entirely, and we realize that. And one of the ways that we help companies do well is actually provide access to funding avenues. Like I said, I will let Raymond and Joseph talk about private equity and what the Science Park can offer. But from a broad overview, one of the things that we like to promote to any inbound companies is a special purpose vehicle called the Innovation Technology Fund, which is a manifestation of the Innovation Technology Commission. You know, not a big leap in naming there, but basically what it is a government mandated venture capital fund specifically targeted towards innovative technology companies. In effect, it is a public pot that's overseen by a number of specialists, and by all intents and purposes, government bureaucrats are not fund managers, they're not venture capitalists. So actually that fund is dispersed by specialists found within partners. Either they are venture capitalists or they are mandated agencies such as the Science Park. And what this fund is meant to do is help companies at different stages of their development funnel, such as initial setup to research and development, hiring, business expansion, and overall fundraising. And the Innovation Technology Fund is actually about 2 billion Hong Kong dollars. It has a matching element. In other words, if a venture capital company that is partnered with the government invests in a company, the government will match it up to 40% of the investment stake, or 30 million Hong Kong dollars, whichever comes first. But the fund, the amount of public funding also takes place when it comes to business expansion. For example, if a company sets up in Hong Kong and puts up their hand and says, we want to expand our operations to mainland China or Southeast Asia, there is another fund called the Branding, Upgrading, and Domestic Sales Fund that a company can be eligible for. So through this funding, we actually facilitate networking to different organizations that are not government, that are like that are corporate or academic, at any company that's set up in Hong Kong's request. And so the Hong Kong Science Park is one of those organizations. A venture capital organization such as Saltagen would be another, or even a corporate such as RBC or HSBC. If that request is made, we would facilitate that introduction at no charge.
Okay, thanks. So, I mean, no shortage of options there, and it seems like it's pretty broad. Maybe Raymond, if I can get to you, you're kind of on the tip of a lot of the innovation types of pursuits as well. What are you seeing? Like, what kind of companies are coming to you, and are there other different forms of capital or funding that you're seeing as well?
Right. Perhaps I won't repeat what Chris has said. So I'm going to supplement with it, deep dive a little bit. I think on top of the ITVF, it's sort of a demonstration of how Hong Kong government is supporting the venture capital area. And I think we should take a step back, is that other than venture capital, there's some government funding, subsidies that will be able to given out. And the third is that there's some in terms of the government grants that are for specific projects as related to the universities. So coming back to the venture capital, I think on top of the ITVF that Chris has mentioned, Hong Kong government has actually given a lot of support for Hong Kong and Science Park to roll out a lot of programs. The programs come into two phases. One is in terms of capital. So we have an $80 million US fund here in Science Park that we can invest in. And right now we have very flexibility in terms of what we're encountering from Canadian companies. Most of them are earlier stage incubators companies, and they are looking for up to $1 million Canadian dollars or US dollars around there in terms of fundraising. And also in Science Park, we offer not only the capital, we also offer a connection to investors. And these investors could be could come in different forms. They could be financial investors, it could be corporate investors, therefore giving a lot of corporate support in terms of business connection, trying out the products, co-creation of the products. On top of that, we have different types of investors in Hong Kong, say from the family offices, from as well as there are very, I would say, specific tech-specific funds. For example, biotech funds, and they're very specialized. So these are the types of VCs that we categorize. And in terms of the Canadian connection, we're very privileged to having Joseph, the Saltagen Venture Funds, to collaborate with us to not only invest in a company as well as introducing some Canadian companies to us. And to quote some examples, in 2019, and through the Check a Box program that was run by Saltagen Ventures, they have introduced us to about more than 10 Canadian companies. Those are companies that are, they have established to a certain extent, they want to expand into Asia. So, so we have a program here that would receive them. It's called Global Acceleration Program. And basically what we do is that we have 1 or 2 weeks of program here. We welcome them, show them around here, give them the business connection, show them, connect them to the investors, to talk to them, to show them some of the manufacturing capabilities around Hong Kong, and introduce them to GBA Global Greater Bay Area here. And so all these, we help them to sort of engage, to get a feel of what we can offer. And then afterwards, they can decide how much resources to put here and to expand. And just to quote a few examples that Joseph brought with us is Eco Packers. This is a company that transforms agricultural byproducts into non-toxic material to replace plastics. And basically, they came to Hong Kong and they joined our competition, and they are one of the winners in 2019, and therefore given exposure to many business in connections as well as investor. And we also connecting them with our green tech cluster to promote some of their products for use in Hong Kong as well as GBA. And so that's one example. And I'm very thankful that these connections are, because through the screening of some of our collaborators like Saltagen Ventures and also Creative Destructive Lab that we were introduced to, we'll be able to select the cream of the top from Canada that will actually help to make these cases more effective and more successful. And so those are the couple of offerings we have here, and maybe I'll expand later. I'll perhaps let Joseph to talk about from his point of view how the collaboration worked.
Thanks, Raymond. Joseph, over to you. Good to get a deeper dive.
Thanks for the segue, and I mean, thanks for the support as well too that's been going on. So I look at it like this, as an investor, and working through the whole process of scaling companies. And I'm going to use examples specifically from Canada into Hong Kong. So, a lot of people know that the early stage startup environment for Hong Kong, there's quite a lot of non-dilutive grants. Quite a lot of these startups rely on IRAP, NRC, SHRED grants and all that, and early stage. But the thing is that no matter what, a lot of these companies know that the Canadian ecosystem will be quite small and limited, and they need to kind of look at other areas, and US makes a lot of sense naturally. But at the same time, I think due to political issues, and also the fact is that not all startups actually benefit from an absolute level in terms of their growth potential. Electric vehicles, hydrogen fuel cells are much, much better to grow in China than that of US. And so a lot of these startups are forced to kind of plan strategically where they grow. And so the question is, how do you actually scale and make it easy? I kind of categorize funding, and funding is actually a critical component. I'll categorize it into three parts. So I'll look at it from traction-based funding. That means, closing sales and pilots to actually get recurring revenue, because that's a foundation of your valuation. So you can get a multiple on that. That's actually critical. Number two, additional non-dilutive grants from both sides of government, from Canada, from Hong Kong, from other places. It reduces barriers of entry because it is actually costly, especially when you're bootstrapped at an early stage to scale up without a large team. So, that's where the government can facilitate, these restrictions and facilitate, lifting these restrictions in that way. And number three, finally, is the investment side, is where investors in their specific regions, in their specific strategic benefits, they know that the startup has potential after they've demonstrated that traction and they've landed appropriately in that way. So I think, there was this three-parter. It's actually very important. And I talked about, the Canadian grants, and, both Chris and both Raymond has talked about, the services that the government and also government, sponsored organizations have given. And there's a lot of bits and pieces, and you kind of need, at least, I think initially some guidance to see how they should prioritize their time to apply for these grants. How does it work in tandem as you look to secure contracts? Which are the ones that help you land? If you need an R&D facility, do you look at Science Park? If you need, additional funding, say for example, just to hire personnel for distribution, that'll be another type of grant that's necessary as well too. So it's quite contextual, and that requires navigation. That's why, programs like GAA, the Global Acceleration Academy over in Science Park, our checkerboard program, also with CTA, with the trade commissioners in Canada, is actually quite critical to see how that works. And there's a level of customization that's necessary because there's honestly quite a lot of choices, but not enough time. So how do you actually put that together? And kind of using the examples that of a success story was EcoPackers, I know that Raymond brought up. Startup company came out from Creative Destruction Labs, came over to Hong Kong, and they won the Science Park elevator pitch, got a lot of traction from there. Horizon Ventures came in, invested in them, helped them also land in Shenzhen. Shenzhen Science Park also helped them scale as well too, within a very short period of time. This is talking about, I would say, less than half a year. And then going back, they went back to Canada, to MyTax, which is a government funding program that gave them around $2 million of funding just to scale outside of Canada as well too. So these processes kind of work and they build up on each other. It's not just a singular aspect. And to wrap your head around it, I think a CEO of a founding CEO of a startup needs to know that these are all their choices. And now how do they kind of fit that puzzle in at the appropriate amount of time so it can kickstart it right away? And then they can envision this whole process of how they can actually land and scale, and then they can raise. And that's where, that's why, like, EcoPackers, they don't even actually, they have enough runway not to raise for a while, but they are, kind of building up a pipeline of investors now from China that's, increasing the valuation by quite a lot because of the traction that's gained through Hong Kong and in Canada. So this funding, aspect is not a one-off. It has to be strategic, has to be public and private, has to be cross-border. And that's where, this conversation I think is really valuable, is that, who do you approach first? How do they open the doors? And how do you actually get that at a right pace so then you can actually carry that on as a founder? I think, Hong Kong's demonstrated its value here.
So that's another great segue as well. And the question is, how do folks go about doing it? Like if I've got this idea and I'm about to form this company and I know I want to kind of expand into Hong Kong as well. Who do I talk to first? Like, do I talk to Chris and invest Hong Kong, and then maybe I get the lay of the land and then figure out kind of what's what, and then maybe I go to Raymond, do a good pitch, right? Maybe I qualify for a bit of a grant or some funding from HKSTP, and then maybe Joseph yourself at Saltagen to then help find additional investors. But where does one start?
I think I'm going to expand on what Joseph said. It all depends on context. There's a couple of mitigating factors that a Canadian company, especially a startup, would take upon their first arrival in Hong Kong. First off, COVID-19 had a significant effect here in Canada in terms of the type of startup that's able to actually go overseas. It's not a big secret. A lot of startups suffered here in Canada. A number of significant incubators and accelerators either paused funding and decided to concentrate on those that they felt were furthest along the development cycle, like those in growth stage, those at seed stage or just touching Series A. They decided no, it's too hard to keep this going. Another thing that happened though in our benefit was that the typical development of a startup's development cycle actually changed. Typically, a company would go for Canada first. Obviously, if you're a Canadian company, you would try to crack the local market. America second. However, 2020 saw an interesting change in that companies that were Canada first decided to do Asia or Europe second and bypass the United States. And the main reason for that, particularly when it comes to Asia, was that suddenly funding sources in Asia became that much more obvious. Basically, the news about reaching private equity or science parks or venture capitalists, asset managers in Asia, the financial markets in Asia are far more dynamic than what you would ever find in Canada. I mean, that's a truism, but the amount available for startups or those at growth stage in Asia overshadowed most other territories around the world. And so that was a significant step change for a lot of Canadian companies. Now, going back to your question, who do you contact first? I think actually for a lot of companies, for a lot of Canadian companies, a Canadian accelerator that has some sort of soft landing program, like the universities, would have a number of programs that help in that. I'm just thinking Communitech over in Waterloo, or like Finance Montreal in Quebec, or the Creative Destruction Labs or Venture Labs in Vancouver. Those are first steps. But if Hong Kong becomes their destination of choice, InvestHK kind of becomes the default. And if you're a startup, we have a practice group called Start Me Up, which specializes at beginning stage startup, those at smaller than growth stage, and they effectively act as mentors towards inbound startups. If a company is further along that life cycle stage, in growth stage, and they're specialists in INT or in fintech, then our practice group specializing in INT or fintech actually pick them up and act as mentors, and can help direct them to other mentors such as HKSTP or a venture capitalist, or the Canadian Tech Accelerator, which I have extremely high regards for. As far as I'm concerned, they've done an excellent job in terms of mentoring Canadian companies.
I think your point around the markets, the financial markets here in Asia being that much more kind of dynamic and probably even versatile is so spot on. Like in a world where rates are super low and probably going to stay pretty low for a little while, yields are going to be challenging from the fixed income perspective. The equity markets, quite frankly, are pretty stable, and I mean, although notwithstanding some volatility. So where else are investors going to look for long-term opportunities? And it's probably going to be within the private space. Like at RBC, we just signed an agreement with iCapital to help act as a platform so that we can access different investment opportunities as well, and to really tap into our clients' desires to invest into something that's a bit more bespoke, a bit more interesting. And especially from Canada, what we're definitely seeing is an increasingly more stronger appetite for technology type companies that are in sustainability, that's very ESG focused. And then just hearing some of the examples that Raymond and Jeff was talking about, and in terms of some of the startups, and it's very, very much aligned. Okay, so we've got a pretty decent idea of how. We actually looks like we've got a good question from the audience here. and it's, well, why is raise capital in Hong Kong? Why not Singapore? How do we help people answer that question?
I have never heard that question before.
No, it must be a strange one to you.
I think I hear it about every other day. And I like to, that is actually one of our favorite questions. As the representative for Invest HK, the government, it is actually pretty easy to answer. We're talking about two entirely different jurisdictions. Asia is a big place. I think a lot of Canadians actually underestimate the size of the continent of Asia. And you were talking about two jurisdictions, each one acting as the hub of the respective region. I mean, Singapore is the hub of Southeast Asia. That's undisputed. Hong Kong is the gateway to China. It is the gateway to Greater China. It is the gateway to the Greater Bay Area. For all of you out there who don't know what the Greater Bay Area, it is a super economic region, a macro region of Guangdong province and Hong Kong. It's basically it's like Silicon Valley or the Ruhr Valley of Germany. 70 million people, 13 trillion GDP, which is about the same size of Canada when you think about it. It is a supermarket, using like Joseph Stiglitz terminology. It is one of the world's fastest growing super economic regions, with an extremely high concentration of high net worth individuals, wealth management professionals, and capital to be invested in up and coming companies. So you have that. I mean, in Hong Kong being the base of the Greater Bay Area, having the basic law anchoring its commercial law in place, being a safe haven for the region, for businesses. It is the capital of Asia for wealth management, for asset management, for investment. We admit that Hong Kong was behind Singapore in terms of private equity, but a number of new policies introduced in the second half of 2020 was crafted to aggressively change that, to actually make Hong Kong a stronger center of venture capital activities. And so, going ahead into 2021, Hong Kong will stay the hub. It will stay a major financial center, and will stay as the anchor, the financial economic anchor for the Greater Bay Area and China.
Proximity too, right? It's
right across the border.
Direct flight, right? It's a direct flight, and I think your point around Greater Bay Area is also very, very spot on. For those who haven't really traveled much to this part of the world, like the Greater Bay Area is 70 million people, which is 2 times the population of that of Canada. And Chris, you mentioned GDP's pretty much the same size as Canada for the Greater Bay Area alone. So those are the kinds of figures and facts that unless you're kind of in it, you may not be aware. Joseph, Raymond, how about you guys? Any thoughts? Anything you want to build on top of Chris, or we can get into some other nitty gritty?
I can support Chris 100% on that. I mean, The fact is that, for us, we don't only just look at Hong Kong, but Hong Kong tends to be there's a gravitational attraction from, just due to many facts. Of course, it does act as a natural gateway, but what does it really mean, right? Like, we talked about incubators coming out from Canada. We work with Communitech, Velocity, Eventual Lab, and all that. They've gone, and sent a lot of these startups, to tour around China, to tour around Singapore, even Vietnam and Indonesia for opportunities. But the thing is that it's, for a lot of these founders, it's quite difficult to really envision where you can start to actually launch, your startup to grow. Some of these, may be much more clear. Like, say, for example, if it were to be a very specific, say, ag tech for, say, prawn aquaculture farming, then it makes sense to go straight into Vietnam or Thailand. But most startups don't have that clarity. They know that in Asia, it makes general sense, but there's so many regulatory hurdles. Each market is different from each other. And now, when we talk about Southeast Asia, Singapore is in a unique position just like that of Hong Kong. But the fact is that, Singapore still is a different country than that of, like, say, Malaysia, to that of Indonesia, despite its close proximity. Whereas for Hong Kong, it's more, as Chris was saying, that it's quite easy for startups, once they get comfortable with Hong Kong, is to cross the border, go to Shenzhen, and to just take a half a day trip to develop and scale their opportunities. In particular, a lot of the attraction comes from, again, I use that word, business traction is perhaps manufacturing. If you have a hardware piece that you need to manufacture and scale beyond 5,000 units, where do you go? You naturally think about going to Dongguan, Guangzhou. Those areas are all just within half a day's drive from Hong Kong. And then the capital also is quite attractive, in terms of different types of private funding, from VC funds to private equity funds. And a lot of these funds, even in Singapore, have a presence here in Hong Kong as well, too. So from a kind of a lowest hurdle perspective, if you really don't know where to go and you want to kind of figure it out and to feel comfortable about it, is Hong Kong. It makes it much easier for them to grow. So a lot of times is that it's a personal decision for these founders to say that, okay, I've made my trips. I did a 10-day blitz to the biggest cities in China, but I still can't wrap my head around how do I actually land. They come back scratching their heads in Canada, with these kind of tours and events and all that before COVID. But what really worked was that they come into Hong Kong, they see that there's this kind of coalescence of private funding, business MNCs that would actually take on pilots and discuss with them how to actually get traction. They understand, hey, quite a lot of the basic law, and it's very similar to common law, that of Canada, is that, hey, there's some elements of transparency that they feel much more comfortable with, that they can navigate and report back to their shareholders as well too. Say that this is our first step, then we can take it piece by piece and go into China, to go into Vietnam, to go into Thailand. Those are all possibilities from Hong Kong. That's why it works as a really great gateway.
So oddly, and I kind of knew that we're kind of running short on time because it's such a rich conversation to have. But maybe if we can quickly just touch on challenges and successes. Like, I mean, we know the year that was, and we're still kind of living it. But just really quickly, what would you guys recommend? Like, in terms of overcoming some of the challenges, like not being able to travel, and how would you go? How would you recommend new companies, new startups, new CEOs wanting to pursue additional capital raising here in Hong Kong, or maybe even back in Canada for that matter? What would be your suggestion? And maybe Raymond, I can throw it to you.
Sure. I just to start off with that, I think the investors here in this part of the world, they are actually very active. Originally, we were seeing some slowdown, but then they are actually, we're seeing some investments being done here. And we're seeing some flight to quality. There are some larger companies being funded, but then they keep on meeting with new companies through Zoom, through online, and this is nonstop. I would say that the activities has not stopped, and because of the restriction traveling actually makes things much faster, much more efficient in a way of exchange of information. So a lot of the legwork that has to be done, the preparation work that has to be done early part will be done through online. I would encourage the founders to reach out. Could be through us, could be through your investors, to navigate. To actually do business contacts as well as investors. What we offer here, actually, we have a department that help the companies here to think, to identify, and to iron out what they call the definition of success. And then from there, we will introduce the right investors to provide the right money as well as the strategic value, and then bring them to what Joseph mentioned about manufacturing, about how to grow in GBA, which is like 1 hour commute just from Hong Kong. So it's like a metropolitan city just next to Hong Kong, very close, quite easy, similar language, and all that. And also they will be able to benefit under this market, a lot of unprecedented support from the government. We have received about 1.2 billion US dollars from the Hong government these monies are going to filter through the programs in Science Park directly into the pockets of the incubators and tenants coming to Hong Kong. I think this is unprecedented, and this is an opportunity to get some capital support as well as connection around here.
Okay, we are at time, and like I said, I knew this would breeze by pretty quickly. So many thanks to my panelists, of course, for a great conversation and sharing some of the insights. I know that I'm sure there's going to be more questions to come, and then hopefully you continue to submit them through, and then we'll do our best to get back to you. Many thanks to the attendees, of course, as well, for joining and for participating. We appreciate your time, and hopefully you found it useful. If anyone would like to connect with myself or any of the speakers today, please feel free to look us up on LinkedIn. Our profiles are actually available on the CanChem Hong Kong event place. And if you do want to reach out to other attendees as well, I think all attendees attending this conference, their contacts are made available to you. So please do connect with each other. And we do have more conversations lined up. So stay tuned. I hope you enjoy the rest of the conference.
Thanks, everyone. Thank you.
Thank you.